much, Prime Minister, for being with us. So we have 40 minutes, so that's a great amount of time. So we'll have also about 10 minutes at the end for everyone to ask some questions. So please have your questions ready. Prime Minister, there's a lot that we need to talk about. We'll get on to trade and tariffs and the worry that the world is fragmented. We'll talk a little bit about the fact that you spoke with Donald Trump last week. But actually, let's start on Greece and some of the repayments. You told us in June that there'd be 8 billion that'd be repaid actually a little bit earlier than expected. What comes next?
Well, first of all, thank you so much for having me. Always a pleasure to discuss with you. And thank you, Constantine, for your introductory remarks and your positive assessment regarding the potential of the Greek economy. I'm sure we'll be able to discuss this in a little bit more detail. When it comes to early repayments, I think they reflect the strong financial position of the Greek economy, and we always want to sort of surprise markets on the upside. So I think you'd expect an additional, 5 billion of repayments in 2025 from the GLF loans that would mature between 2032 and 2043. Again, it's an indication of the confidence that we have in our public finances, the excellent job that's been done by our public debt management office, and the overall strength of the fiscal position of Greece, which is not something that many people would have expected 4 or 5 years ago.
Yeah, and Prime Minister, that's why I really want to start there. It's incredible. I mean, this seems to be your North Star, right? I mean, keep the markets on side, deliver on what you've promised, and keep going.
Look, we still remember the trauma of the financial crisis. And frankly, we still have to deal with legacy issues which we have not completely overcome, especially when you look at wages, GDP per capita. Greece suffered tremendously during the decade of the financial crisis, which was unnecessarily long for reasons which we've had a chance to discuss many times. But when we came into power, we realized from the very beginning that fiscal discipline is a non-negotiable, not just a priority, it's a foundation upon which all our other policies are being based. And we've been ruthlessly focused on delivering fiscal discipline and surprising the markets on the upside. And if you look at the state of our budget, we've been able to bring in more revenues by decreasing taxes. Why has this happened? Because the economy has grown and because we've been successful in going after tax evasion. Not many European countries can actually claim to be able to implement such a policy. And we have been able to maintain these high growth rates while at the same time bringing down our debt at a record pace. So I don't think we have any reason to mess with success, and that is why when we submitted our new 4-year fiscal plan to the European Union, we're very, very careful, even taking into consideration that I think that the assumptions of the European Union are rather pessimistic when it comes to our growth rate. We will do better than what some people expect, but we know we have expenditure benchmarks which we need to meet, and we know that whatever benefit we can create from reducing tax evasion, we cannot necessarily spend the money away, but we can reduce tax rates if we prove that we systematically address issues of tax evasion. So I think all in all, this has been a successful formula. The markets clearly are comfortable with what we're doing, and of course, there's collateral benefit in terms of what's happening with the banking sector, but also the ability of large corporates to borrow at lower rates, also benefiting from the cheap RRF loans. And frankly, we need this environment in order to stimulate investment, because the foundation is not enough to build a house. What we need to do once we've created the solid fiscal base is to attract more investment in numerous sectors of the economy, and this is something which is happening, and we can do better even when it comes to attracting investment.
I was going to ask you about foreign direct investment and how you see that going in the next couple of quarters. Are there questions that actually some of the big investors are asking of you, given also the uncertain geopolitical environment?
Well, again, I think we've sorted out the fundamentals. And what makes investors very comfortable is that they don't see a country risk. If anything, Greece goes against the trend. When it comes to the overall political situation of the country, we have, a comfortable, stable majority and a commitment, a firm commitment by me that we will see out our term and we will hold our elections in the spring, early summer of 2027. So investors know that we have 2.5 years, a little bit more than 2.5 years, to see out our mandate. They know what to expect. They know that we are a single-party government, so we don't need to be engaged in complicated sort of coalition negotiations. Just look at what's happening in other, important countries in Europe to understand what an asset this political stability actually is. It's certainly not a given. It's the exception to the rule today in Europe, and that is why that I think is a second important foundation upon which our policies are based. Now, when you look at geopolitics, what could be a challenge could also be an opportunity. For example, we look at Ukraine and the horrible situation in Ukraine. But when it comes, for example, to energy flows, a completely new energy route has opened for liquefied natural gas to enter the European system through Greece. And this is gas that actually makes it up to Ukraine. When you look at, for example, the big geopolitical alignments, the rise of India, you realize just by looking at the map that when we talk about this new sort of corridor, the IMEC corridor, India, Middle East, Europe, the natural entry point into continental Europe is Greece. And that also explains a significant investment we see in Greece in logistics infrastructure, which frankly is pleasantly surprising to all of us. So I look at the short-term challenges, but also the long-term opportunities. And in that sense, Greece, as a stable country, member of NATO, member of the Eurozone, in this geography, offers both challenges but also great opportunities.
Prime Minister, talk to me about the banks. So we have the CEOs of the 4 largest banks. We'll have a panel a little bit later on. Is there anything more that you can do? First of all, the health of the banking sector, but also are there any initiatives to help, for example, with deferred tax credits or things like that?
Let me think how nice do I want to be with... first of all...
you can be as mean as you want.
Let's look at the big picture. I think overall, when we came into power in 2019, there was a big discussion regarding the stability of the Greek banking sector. And right now, the banks are doing very well. They've cleaned up their balance sheet. We helped, of course, through the tools that we gave the banks. And we have a well-functioning, sort of normal European banking system, which is no longer a problem, but it needs to be transformed also now into an opportunity for the Greek economy. Of course, we have, legacies coming from the past, but, the banking profitability is also a way to address these issues. But I do think that, more can be done. For example, when I look at mortgages, and you look at the number of mortgages that are being issued by the banks, the numbers are still low. So I think when we look at our housing policy, for example, I understand we look at sort of the safer customers, but I think the banks are also in a position now to take a little bit more risk to finance the mortgage market, not just wait for the schemes that the government is presenting, because we have a heavily subsidized scheme to help young families obtain houses, but also outside the scheme, what can they do more on that front? I'm all in favor of banking competition, and competition in general is good. It drives down costs and it makes banking more affordable. I'm very happy that our new free direct payment system called Iris has been a great success, especially by young people. We need to see how we can bolster it and strengthen it. I mean, banks currently have on their balance sheets lots of real estate. I mean, they need to get rid of that at a fast pace. That will help the market. We have a tight real estate market, so the more real estate that comes onto the market, the better it will be. And of course, financing the real economy beyond, the very successful large, medium-sized enterprises, offering more credit to smaller companies, take maybe a different risk profile when it comes to financing innovation. I think these are the challenges of the next day. But it's good that we've left behind us the challenges of a banking system where most of the time of the CEOs was basically taken up by cleaning up their portfolios of non-performing loans. That, has been addressed.
Prime Minister, you seem to be asking, banks to, I guess, take a more active role maybe at this juncture in time in the economy. Are you willing to help them out in terms of deferred tax credits? Is there anything that you can give them to make sure that actually they're on a stable footing?
No. No, I think we've done enough already. And the good thing is that we have really helped the banks in terms of addressing the fundamental, problem of non-performing loans. And again, I'm all in favor, and this is what we want: a predictable landscape. I've said from the very beginning there are not going to be surprises when it comes to the when it comes to the government. But banks are partners. In the growth story of the Greek economy, I mean, you cannot imagine a banking sector that does well in an economy that is not thriving. And for example, financing, discussions. We've had discussions with some of the CEOs looking at our agricultural sector, for example, and what does innovation and productivity investment means for a country that is exporting 8 billion euros of goods because we happen to be living in a blessed land that produces excellent, high quality agricultural products. So. All these are, I think, interesting topics for discussion, and of course, we've used the banks as partners in this effort.
Prime Minister, would you welcome a new entrant, like, let's say a foreign bank coming into Greece? Is it time for something to be shaken up?
Well, it's not my job to determine what will happen in terms of market forces. There have been investments by big, foreign banks into Greek banks. Again, I don't see a need for further consolidation of the Greek banking sector, if you ask me personally. But again, it's a market and the decision makers themselves that will define that. On the other hand, I could see certainly room for more critical size when it comes to European financial institutions, because we speak a lot about Greece, but one of the big challenges we face at the European level when we talk with our colleagues is to sort of have institutions of critical size, and also to make capital markets union a reality, because we've been talking about it for many years now. And if you look at the Draghi reports, it's one of the first issues that it highlights in terms of the inability of young, growing European companies to access the capital that they could access in the US. So capital markets union is a necessity. We support it 100%. There is a model in terms of which is the way we regulate our banks, our systemic banks, regulated centrally by the ECB. The smaller banks are regulated locally. We could have a similar system when it comes to our capital markets, but there is a clear understanding that this is a necessity.
But do you think this means that actually Greek banks should look overseas more and do more business in Europe, or do they need to wait for a working capital markets union, which frankly at the moment is still quite elusive?
Yeah, well, I think we probably have the right people to ask, but I'm sure, the banks are looking also. They're also looking, looking at markets, for example, such as India, which India for us is probably the greatest sort of opportunity in terms of building a strong geopolitical and economic relationship, bringing in more, more tourists, expanding into Greek companies, expanding into the Indian market, bringing in Indian investment into Greece. So, one of the tragedies of the crisis was that the banks were essentially forced to sell off their holdings in the Balkans. I mean, they were forced to do it. They didn't want to do it, but they were forced to do it. So we had a strong regional presence, and most of that presence, some exceptions, no longer exists. But if we aspire to play a role as a leader in the region, it's only natural for the banks to also look beyond the borders of Greece, and we would certainly welcome that.
I mean, the government has offloaded most of course, the stakes in the big banks in the last 12 months. Why is that? So you can focus on other privatizations, or it was just time?
Because we have no job in having
it was done
in banks. There's a stake we're maintaining at the National Bank of Greece, but again, to be examined in the future. But I think overall it was a successful policy, and it's also good that the investors very much welcomed these decisions, and that now we have a portfolio of very serious investors investing in the Greek banks that can only be helpful. We don't have a particular value to add in a bank. It's not our job to be shareholders in banks.
What comes next in terms of privatization? There's a lot that could happen.
Well,
what's your priority?
A lot has already happened, and let's for a moment just take stock of everything that we have achieved over the past year. 11 privatizations that we have done in total. So I would argue that probably this cycle is more or less coming to an end. There's not that much right now to privatize. My focus would be when it comes to the state assets to increase the efficiency of those companies that will remain within the Greek sovereign fund, because as you know, we're merging all the entities that were holding Greek assets to see how much value we can unlock for those companies that will remain under state control. And we've actually proven that this is something that can be done, and that we can maintain. Also, there are companies in which we can maintain a strong state. Look at the Public Power Corporation, which can be run extremely professionally, which can bring in foreign investors, and from laggards to turn into leaders. I mean, the PPC was another company which was on the verge of bankruptcy when we came into power in 2019, and now it's doing very well, and it's also one of those companies that is also helping with our overall strategy when it comes to the green transition.
Prime Minister, you were one of the few heads of state in Europe that was in charge last time Donald Trump was president of the U.S. You had a call with him last week when he was elected president. How did it go?
Well, I'm surprised you didn't ask me this first.
It would have overshadowed all of our great banking conversation.
Yes, I spoke to President Trump last week. We had a very friendly discussion. He recognized the great progress that the Greek economy has achieved. After all, what we have done, which is reducing taxes and focusing on a business-friendly environment, I think rings some bells with him. Of course, the U.S. can afford to run a much bigger deficit than we can, but we didn't discuss about that at all. But we also spoke about the strategic partnership between Greece and the U.S. And of course, when we look at the U.S., all EU member states have bilateral relations, but we also have a relationship as a European Union with the U.S. And the Greek bilateral relationship with the United States is profoundly strong. The foundations were even built during the last months of the Trump administration. We have a defense and cooperation agreement with the U.S., which we signed for 5 years. So it will extend and will be prolonged, but it also extends into the term of the new president-elect. And we've made this relationship not just about defense and security. We've also made it, a strong economic relationship. If you look at also the amount of direct investment we have by U.S. capital into Greece. So all in all, very pleasant and positive discussions. I met President Trump. I was at the White House. I met him at NATO gatherings, and I'm looking forward to working with him again.
Do you worry about tariffs and fragmentation?
I do worry about tariffs because I'm a proponent of free trade, and I believe that tariffs eventually don't create a net sort of positive impact, and my position has not changed. But when it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the US-European trade relations. I can't go into more details because I don't know, how the US is going to approach this topic. But I do think that a trade war between the US and Europe would clearly not benefit neither the US nor Europe. And I do think, regardless of what will happen with China, that the US-European trade relationship needs to be preserved and needs to be addressed as a standalone trade negotiation.
But Prime Minister, what's changed from the first time round he was in charge? So again, we have a lot of nominations. It seems that the president-elect is going for loyalists. Does that change the relationship with Europe? It also seems that Europe could be much more organized than the first time round, where, frankly, a lot of the leaders in charge were surprised by the tariffs. So is the power dynamic going to be different this time?
Well, first of all, let me point out that this discussion around the European strategic autonomy, the need to boost our competitiveness, did not start with the election of Donald Trump. The Draghi report was prepared before the Draghi election, and even if before the Trump election, and even if Donald Trump had not won, the fundamental assumptions and recommendations of the Draghi report would still hold. Maybe there's a renewed sense of urgency to wake up sort of from our geopolitical phase of our geopolitical naivete, but this is something which is recognized at the European Council. And when you look at, for example, issues of competitiveness, some of the issues which are touched upon in the Draghi report are critical for Europe, regardless of what happens in the US. Energy. We've spoken a lot about energy. I was the first to make my point very, very vocal. We don't have a European energy market now. We have something which pretends to be a European energy market with 26 various strategies. And if you look at the discrepancies in prices, especially when it comes to Southeastern Europe, it's unacceptable, completely unacceptable in a European so-called energy market, that the countries of Southeastern Europe, which are the less prosperous countries, are penalized because you have some sort of strange algorithm that does not send enough energy to Eastern Europe or from Eastern Europe to Central Europe to protect the more prosperous parts of Europe. This is simply not acceptable. And we're not talking about a one-day distortion, which we could explain. This is a pattern. And we will make our case very, very clear to the European Commission. And I think the new president of the Commission also agrees that, bringing down energy prices, but for all, not just for some. Greece is a protagonist when it comes to the energy transition. But we have not yet benefited in terms of prices from the investment that we have made. And this is not the only case where the European single market is not working. I find it difficult to explain why a product of for example, a multinational company, a detergent or a shampoo, can cost much more in Greece than it costs in a mainstream market in Europe. Is it just transportation? No. It's technical regulations, what we call territorial supply constraints, which allow multinationals to price their products differently in the bigger markets. That's not a single market. That's unfair to the smaller countries. So some of these issues need to be addressed because at the end of the day, promoting the single market and strengthening our competitiveness across the board is going to be critical to deal with the United States, which will be more, I wouldn't say more isolationist, but the America First policy is clearly going to dominate. Now, when it comes to the nominations, I'm not going to comment at all about those. The only thing I can say is that we will work with the people who will be confirmed by the U.S. Senate when it comes to foreign policy. We know, for example, I happen to know, Senator Marco Rubio. He was a co-sponsor an important piece of legislation regarding the Eastern Mediterranean region, and he knows the region well. And I think it's good that he understands the complexities of our region.
But, Prime Minister, going back to the Draghi report, I mean, it was very comprehensive. Some say it was alarmist, but frankly, it feels like it's just fallen on deaf ears. I mean, it was like speaking to a desert. So is Europe finally going to actually do something about competitiveness?
We're at the beginning of the new European cycle with a new Commission, which I do hope will be put in place by December 1st. We'll still have some final confirmation votes to take place at the European Parliament, but I don't anticipate any complications. And with the President of the Commission that has a very clear mandate to deliver on issues related to competitiveness. And she also believes in this. I mean, I'm very much aligned with the President of the Commission on these issues. And I think it will be the litmus test of the new Commission whether we are able to address these issues and whether we can make the Green Deal work for all. Because the Green Deal is not just a very, very fast green transition to meet some nominal targets. It also needs to work for our business. If we drive European industry into oblivion while making the Green Deal work, when we only account for 6% of global emissions, I don't think we will have achieved something very significant. So I'm a believer in the green transition, but if this requires recalibrating the pace and, of course, looking at the overall regulatory burden, I'm all for it. And I think there's a general understanding within the European Council, but also within the Commission, that this is a direction in which we need to go. I'm a big believer in the green transition, but I'm also a big believer that we cannot only look at long-term mitigation, how we will bring down our emissions in 2035 or 2040, that we need to do, but what about adaptation in 2024 and 2025? How much money are we actually spending to protect our countries, our communities, from what we know is already happening today? I mean, look at what happened in Spain. I mean, we had similar catastrophic floods, thank God, without significant loss of life in Greece. Last year we have wildfires, we have water shortages. I mean, these are critical issues. For example, let me give you an example of the complexities of European regulation. Should it be part of the of the Green Deal to invest in water conservation today? Maybe technical. Some European bureaucrat may tell you, no, this really doesn't bring down the emissions, but it's critical. It's critical not just for adaptation. It's critical for the competitiveness of our agricultural sector. It's an environmental investment. This is probably the number one challenge that in Greece we will be facing for the next 10 years.
But Prime Minister, is it therefore critical to convince Donald Trump to stay in the Paris Climate Accord? And again, how do you deal with President-elect Donald Trump? You know him. What's the right way to try and reach a deal, especially if he wants to go country by country instead of looking at the European Union as a whole?
As I told you, I think when it comes to trade, it's impossible to do. The European treaties don't allow bilateral deals. Now, when I look at what's happening in the green transition space in the U.S., there are the official positions of the government, but the states also are playing a critical role, and many of the states are clearly pushing the green transition maybe faster than the federal government. And of course, there's a huge allocation of capital in clean tech. I wish there was more capital invested in clean tech in Europe, but technological solutions I'm convinced about that, will help us address numerous aspects of the climate crisis. And that is why I believe that also in Europe, we need to be ruthlessly technologically agnostic when it comes to the emerging technologies, because simply we don't know what will end up working and what doesn't. So it shouldn't be our job to say, oh, this is the only technology that works. I mean, the market is going to a certain extent, and science will determine which technology works. For example, look at shipping. Does anyone have a solution right now? Does anybody know what green shipping may mean in 5, 10, 15 years? We don't know. There are various technologies competing. If we were to impose sort of a regulatory burden or point to a specific technological direction, I think we would be making a mistake. I mean, probably the most obvious example is nuclear technology. We don't have nuclear in Greece, and we're interested in understanding what's happening in the small modular reactor space, but we don't have any sort of regulatory history or understanding of how this technology works. So we don't have any skin in the game. But nuclear is a zero-emission technology. There's no doubt about that. And I do believe that it will be part of the overall mix. So excluding technology simply because there are other aspects which we don't like doesn't seem to me to be the right way to go.
But, Prime Minister, do you feel unsettled? There's a lot going on, right? It could be these technologies, competitiveness in Europe. There's also a power vacuum with the German elections. There's AI. There's this trade concerns. I mean, is it unsettling to lead a country in these kind of uncertain times?
It's certainly very complex. And that, I think, is what, sometimes, it's difficult for people to explain that leading governing these days is not easy, and that is why I think you also see a significant backlash against incumbents. In 2023, we essentially went against the trend. We managed to win a re-election, and we increased our share of the vote. It was not easy. Why did we succeed? Because I think we delivered on our basic promises. So I think in this complex world, people basically want to feel, to a certain extent, safe and protected. There are lots of things happening that people don't understand, and we don't expect them to understand. So finding a way to make sense out of this, out of these sometimes out of this chaotic environment, and explain to people that, look, okay, things may be happening, they're all difficult to explain, but as a country, we have a course, this is where we are, this is where we want to get, this is what you can expect from us. For example, my number one commitment is to increase wages in the second term and to continue to bring down taxes and to also shift our support, because we've really helped a lot, people with lower incomes focusing on the minimum wage. And I want to shift our support to also make sure that the middle class, feels the benefits of this growth. That, for example, when we look at AI, this is what you can expect. This is what we can do to help you with the technology. This is what we can do to regulate the technology where we feel that there are issues which require regulation. So part of our job is also to explain in simple terms what is really happening and to debunk various conspiracy theories. That is a big problem that our democracies are facing. I mean, conspiracy theories they always existed, but they're now much easier to spread. And it is our job with simple words to explain to people, to respect that people, first of all, don't know all the facts. I mean, one of the big things, what I call sort of the arrogance of the Davos elite, is that we expect everybody to know what we happen to know. No, people go about their daily lives. They have issues, and they can easily believe conspiracy theories. It doesn't make them, bad people or, deplorables or whatever. No, that's the wrong way to look at how a democracy is functioning today. So we need sort of a backlash against this populist surge, and to basically explain in simple words what it is we're doing and what is it in it for the people. Yeah. I mean, people are not concerned if our headline GDP growth rate is 3 times the EU average. Is this translated into better disposable income, higher wages, better public services, better hospitals, better schools, better public transportation? That's what they care about.
Prime Minister, you recently also expelled, actually, from your party a former Prime Minister, Antonis Samaras, a hardline nationalist. Do you worry? I mean, what does that mean, actually, for I guess, opposition, for nationalism potentially coming back? Is this a concern of yours?
Look, what is done is done, and I think the decision was very, very clearly explained. My job is to look forward and into the future. Again, I want to stress that we have a comfortable parliamentary majority, and that in these turbulent times, the last thing we need is to experiment with the political stability. So treat this as a one-off, a sad, one-off incident, but we leave it behind us now. And I think the important thing is to make sure we deliver upon our commitments.
You don't think? I mean, does the election of Donald Trump change the conversations around nationalism in Europe? Is there a worry amongst people in charge that the conversation shifts?
Well, be wary of. The one thing I can say is be wary of imitations. I mean, the U.S. is a very peculiar political system, and Donald Trump is quite a unique, political personality, and sometimes, I think you'll find many sort of wannabes. In many imitators, also in the European sort of hard right or far right, and even when you look at in Greece, yes, we've had parties, smaller parties to the right of New Democracy that in the last elections got a significant share of the vote, but they were sort of fragmented, and in my mind, they don't propose a credible alternative in terms of the direction of the country. I've always been a big proponent of what I call responsible patriotism. And when you look at our foreign policy agenda, we strengthened our armed forces, and it's always a big drag on the Ministry of Finance because they know that we have to spend 3% of our GDP on defense because that's how it has to be given the neighborhood we're in. We were very tough but fair when it comes to our border management policy, and I've been unapologetic about protecting our borders. At the same time, if we can have legal agreements with countries of origin to bring in skilled or unskilled labor, we want to do that as well. So for me, the best answer to those who believe that it is inevitable for Europe sort of to shift to the right is to be a proponent and to believe in the policies that you follow. I'm a center-right political leader. I do believe that eventually elections are won and lost in what we call the political center. At the same time, I'm also someone who will not accept anyone questioning my patriotism and who has strengthened Greece. Greece is much stronger today than it was 5 years ago, and it will always approach our discussions with Turkey in good faith, but knowing very, very well what the red lines of the country are.
Prime Minister, I only have 2 minutes and a half left, actually. So what do you think happens in Ukraine? Is that an impossible situation, or even an impossible kind of, is it impossible to model what happens in the next 6 months, 12 months?
What I know is that any discussion, I think that I have two fundamental premises. They may sound general, but I think most of us will agree with them. We cannot discuss peace in Ukraine without Ukraine, and a peace discussion cannot be the result of a Ukrainian capitulation, because then it will not be peace. It will be something, it will be sort of victor imposing terms on the defeated country. So that is why I believe that support for Ukraine, to put it in a position to have at some point a negotiation with Russia is very important. This has been the position of Europe from the very beginning. I don't know what is going to happen come January, but what I know that in the short term, when a country is attacked, we need to give it the means to defend itself.
But do investors, again, we're here at talking about the economy and banks. Do investors link the two actually on the future of Europe and what happens with some of these big geopolitical questions, or do you think we can continue making a difference and not linking the two?
Look, this is a complex world, and of course investors are always looking for opportunities. And again, I can only make the case. I've been making the case for Europe, but I'm also making the case for Greece, that in these turbulent times, Greece seems like it's going against the trend in terms of the performance of the economy, the overall political environment, and of course the fact that Greece has gone through its own experiment with populists, and that didn't go very well. So people still remember that, and what they crave now is stability, is to be able to put their house in order, to focus on what's best for them and for the family, and for our government to give them the tools to do that. So I don't see that changing in the foreseeable future.
Prime Minister, thank you so much. Thank you for joining us today for a very wide-ranging conversation.
Thank you.
It was clear.
And so much for the questions of the audience. Huh?
So much for the questions of the audience. Thank you, Prime Minister.
Thank you very much.
It's now my great pleasure to actually call on stage Chad Thomas.